It's time for the futures outlook. The dollar is now positive after touching its lowest level since 2018. Still on pace, though, to close out its worst month in a decade. For more on how futures traders are navigating all of that, let's bring in Bill Baruch of Blue Line Futures and Scott Nations of Nations Indexes. Scott Nations, you first. You give me the fundamentals on where you think the dollar's going and why.
Scott, we lose sight of the fact that it's relative rates that drive the dollar. And over the past 52 weeks, our 10-year yield has dropped by 147 basis points. 147 basis points. Compare that to Germany. Theirs has fallen 9 basis points. Japan has actually increased. So the Fed doesn't care about the dollar right now. They care about jobs right now. That's the fire they want to put out. As far as they're concerned, the dollar is what comes next. That's the water damage after they put out the fire.
Bill, technically, how do we look?
Yeah, Scott's right. The dollar's been the sacrificial lamb, if you will. But ultimately, what we're seeing here is the dollar broke a new low. It took out the June low, and then it just precipitated lower. The dollar index is a basket of currencies. The dollar index is made up by 57% the euro. Euro's at the highest level since 2018 and has led the way. British pound, as well as the Japanese yen, are another 25% combined there. But focusing on the euro, I want to show you this chart. It goes back to 2009. It's a monthly chart. It's going to be huge here for the day where it closes. It's gone up to this trend line, and it's touched it. It's not out above it here today. And closing at 118, 118 and a quarter, out above there would be a breakout. Below there would not. And then the dollar index, very similar trend line from 2011, comes in right about 92, aligns with a 382 retracement. Almost got there last night. Not quite, but nice reversal on the monthly in for those charts.
All right, good stuff. Gents, thanks. Good weekend to you both.